Just to further explain to you what fair value gap is all about, I'm going to show you a fair value gap that has actually been used on BTC and why BTC is reacting the way it's currently reacting and why it reacted the way it reacted, right? So look at BTC, right? Over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 15, let's stop there. Over the last 15 days, proud to the last 3 days, BTC has been selling, and I want to show you why and how you could have spotted, where if you have missed a trade, how you would have spotted where you could have actually joined the sell trade, without probably looking at any rule. I just wanted to focus your attention on this or the price action that has taken place just right about here. So let me just take this off, right? Now, so see what happened. Price actually got to this high, right? After price made this particular high, right? And this low, this particular high right here, and this particular low right here. This I will call my dealing range. I don't want to go into so much detail. I think I've explained how to identify a dealing range in some of my past, videos. All right, for those of you that have been in the community. All right, so this is a dealing range, and for as long as price, the BTC price has not really closed. Let me tell you this: for as long as BTC is not closing above this place or closing below this particular low, we cannot in the long term confirm whether BTC is going to be going bearish or going to be going bullish. So those are just confirmation area. But within this particular range, there will be opportunity for some kind of money making, right? If you know how to identify the institutional footprint in the market. So now, if you the first thing you will see here, let me just really go to why I came to this charts just to show you that some of these the reference point work. The first thing I want to really show you here is actually the fair value gap, that is here, right? And I would like you to see. Let me remove this and use my gam box to explain that. So it's actually the fair value gap that you can see here. Remember, I told you earlier in my old video that fair value gap is actually a three-candle price action in which the low of the first candle of the three candles is not connected to the high of the third candle in a bullish scenario. This is a bullish scenario. So because this low of this first candle here and the eye of this third candle are not connected. So this body didn't see any spike going through it on either side of the bar. So this whole area is actually the fair value gap. All right. And I also mentioned that the middle of the fair value gap is called the consequent. Sorry, guys, let me just it is correctly, is called the consequent, right? Encroachment. Now, let's look at what price actually did, and you see the perfect alignment in what price did here and what price actually did on gold that I explained in my earlier video. So we are within this trading range right now. I don't want to go through the stress of explaining what is a valid pullback, what is not a valid pullback. Please stay tuned to our channel. You'll probably learn more about this thing. But my major concern right now is to explain how and why price reacted to this fair value gap the way it did. And what you can just see here is that after this fair value gap was created, this bullish candle right here actually come in between, just like I explained in my earlier video, in between 0.5 and sorry, in between the 1% and 0.5, the 100% and 0.5% area of the fair value gap. And you can see price actually mitigated and then died all the way from that point, down to this particular low, and we saw this particular reaction, right? And that is how to. So if you understand fair value gap, it's always a good, uh, risk to take. Because you already saw this low, so you know that at some point this particular spike right here is going to get covered, but you also want to keep yourself within a particular zone that's almost guaranteed that price is going to test. And if I were in this market, I will not take my trade beyond this zone. So what I would have just done was to take a trade, would have been to take a short trade from the 75% of this area, and then probably just cover a little above the 50%, because I know if price should come to above the 50%, there is a likelihood that price will reject and continue to go down. And the bottom of the fair value gap would have been my exit. And you can see what happened, even though price still went deeper, because this is a very long rejection candle, right, to the upside. So but in order to be sure that I'm able to take something out of this market, I will not go below the order block, so I don't miss my profits by a few pips, and price probably just go against me. And as you can see, in the last 3 days, price has been going in the opposite direction. And what I would like to tell you is that you need to wait and see whether price is going to actually come into this, into this area, right? But I wouldn't into this area, which is the consequent encroachment area. But if price comes back to that area and then we just see some aggressive candle closing above the fair value gap, then what would have happened is that this fair value gap will be turned into an inverted fair value gap. Why? Because there's a bodily close above here, and then price can then use this area again and then continue upward, maybe to the premium area. So it's a very it's something that is very likely to happen. So you need to be very careful and watch out. And then once you see any bearish price action around here in the premium area, then you can actually use it. So let me just quickly show you how to mark out your premium area. You can just take your fib and then take it all the way from here down to this place, and anywhere from 0.5% or sorry 50% of the Fibonacci area down to 100% is the premium, and anywhere from 0.5 down to 0% is the discount. So this is simply how to use fair value gap, and you must always watch out when a fair value gap has actually turned into an inverted fair value gap, and this requires a lot of patience. So if you go down to lower time frame, you can see opportunity for a counter trade. I will advise, if you want to do this, go and see a clear price action in 15 minutes. Let me clear all this and let's even see what's going on in 15 minutes. Maybe we can see some bullish price action. So let's see. Before I do that, let me also go back to that and just mark out some area of interest, right? Some areas of interest. Let me just quickly do this, and let me come back to this. So my area of interest will be the consequent encroachment area. So I'm going to probably just clear out this chart and then just look at the middle of the fair value gap, which is taking it from this low down. Sorry, let me not use it, but actually let me use my can box, which is this, right? And then I'll probably just come here and then look at the fair value gap. I can just take the whole of this I'll take the whole of this bearish breaker block right here, right? Sorry, I did not remember to tell you guys something. This nigger right here was supposed to be a bullish order block, but when price was coming, it could not hold price, and price closed below that area. Then that bullish order block is now a bearish mitigation block. Why is it a bearish mitigation block? Because you see price, I've explained that before, because when you see the price action broke structure right here, right about here, right, But the next candle after creating a low and actually taking out this low right here, when price was actually making a move back to the upside, price could not do take out the previous high, and come down to continue. So it failed to take out the previous high right here. And because of that, this is now a, bearish mitigation block. Why? Because when price was going up, this was the last bearish candle that painted, forming a bullish order block with this aggressive bullish candle. But when price was going up, could not take out this particular high just right here. Price could not take out this high and then still respected, the trend line and failed to continue higher. But the bullish order block right here could not hold price. So it became a bearish mitigation block, mitigation block, right? So, um, a bearish mitigation block will always be tested, right? So price broke through. So what I'm expecting at some point is actually some kind of, counter trading, and then price will probably now expect this as a bearish mitigation block. And you can see there is a confluence between the bearish mitigation block, the consequent encroachment area, as well as the previous high. So I expect that price may come, take out this high that was created around here, and you can see it's very close to the consequent encroachment, and then price may actually fall from there. So that is the price action you should watch out for. Let me make this chart a bit cleaner so that I can actually show you what I want to show you. uh, I usually don't like my chart being too clustered because I really want you to see. So we've marked out the bearish mitigation block. So this whole area and this high that was created, this whole area, right? I'm expecting that price may come back to, retest that area, right? And, you know, give me some bearish price action by actually, taking out uh, a previous higher low right here and closing below. And then I may want to come and look for any other reference point around here, that will help me take price back to the previous low. And that might be a good trade to trade. But right now, I don't know because this is a daily time frame. So the best way to counter trade is to go all the way, maybe if you like, you can go to 30 minutes, you can go to 1 hour, to the extent that I can see a bullish price action. Don't forget that this was the bearish mitigation block that we saw from, the daily time frame. So my point of interest, right? My point of interest will now be the um the bearish mitigation block. So I'm looking for action that will tell me that price will come to this place. No. So the first thing I will try to do is to look at, okay, let me see if there are trend lines right here. Now, so this trend line is telling me that there is a likelihood of price coming back to tap into this area. And then what do I see in 30 minutes right here? Um, in 30 minutes, the first thing I can see is that you see this high that was created right here, right? This high that was created right here took out a previous high, and this low, and led to this low that actually happened here. So this actually now becomes my, area of, interest, or what I would call my dealing range. So this is a dealing range for me. So the question is, there is also a possibility of price not even getting to this point. But if you look at the higher time frame is telling you that there is a possibility of price. So I can see that price has already begun to make some higher highs and higher lows, higher highs and higher lows. If you take this back up here, you will see very clearly. This is a spike down to, something that I will see around here, maybe like a small order block in 30 minutes. So you can see this aggressive candle already, right? And you can see that we are beginning to see some higher highs and higher lows. I'm still going to teach you guys or probably do a video on, the correlation between time frame, and how you can take the lower time frame to counter trade, into the POI of the higher time frame and all that. So guys, in simple terms, what I just came here to explain to you is how this fair value gap got used. And one powerful thing that I would like to mention here is the fact that there is a powerful confluence between a bearish mitigation block and the fair value gap. This whole area is actually the fair value gap. Let me just mark it out again. The low of the first candle and the high, I'm referring to this. Let me mark it out properly. I'm referring to this low just right here and this high just right here, and the whole of this place right here. This whole gap that was created is actually the fair value gap. So guys, I am just trying um to teach you how you can win in this market. And if this video has really blessed you, I would really like to get some thumbs up, and I would like you to like it, share it, and turn up your notification button for subsequent important videos that can change your trading career like this. Thank you, and see you in the next video. Bye.